The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Here we are overlooking the beautiful Victoria Harbor in Hong Kong. It's incredible, folks. It's a South China Sea, and you've got jet going by all the time, and it's only 40 feet deep, if you can believe that. But it's big enough to float the big one. So, and this is by far the most beautiful city at night in the world, especially if you're here during the holidays, because they decorate the big buildings like Christmas trees and religious shrines and stuff. It's really quite nice. Let's take a quick look now. The score today is going to be me for the first 30 minutes, and then we're going to have Norman, I call it to the minute, Winsky will be on if he's able to wake up. And I think we have a really good chance of that to see if that's going to happen. So Norman will be with us at the half hour. We just passed a big full moon and a bunch of other stuff that looks like there could be some type of a peak in the making. But let's take a look at the DAX as we've seen it here on the daily. What we want to do now is to move it down to the smaller time frame, and you'll be able to see that it's had a pretty good correction here so far today, and you'll be able to see that it has been a pretty good drop down here. We're down about 150 handles in the DAX, which is really a big deal. Now we're going to look at the FTSE, and of course we've always got Brexit out, but as you see here with the FTSE chart, we have completed a really nice butterfly pattern up there at that 7,400 level. We're now dropping, quite a bit early this morning. I don't know what the news was. It dropped everything, but it started sometime around the middle of the night, I guess, and that's what brought it down. I haven't been able to catch up with it because there's just too many irons in the fire. If we take a look at the FTSE here on a 15-minute chart, you can see here that it's had a vicious break here from that 73.70 down to 72.58, and as you can see, the high there was a really beautiful butterfly pattern. In fact, it was a double butterfly pattern going from Tuesday into Wednesday, and then of course here we are into Thursday. So we'll watch it quite a bit here. Now, what we want to do is this is actually Friday morning now, folks. It's Saturday morning here in Hong Kong, and so let's try that again, Larry. It is 9 o'clock at night here on Friday night here in Hong Kong. Tomorrow is Saturday. The way that works, it's astrological. You take the calendar and add one day, and then it gets you from Friday to Saturday. And that's how it works. A couple of markets that we've been following really closely have started to move. I think one of the ones that we've been watching, of course, you'll be able to see is the crude oil. We had some really nice patterns up there at that 1.618 expansion. And it lined up pretty nicely. The high was 70.30. We're now down a full handle from there at that 59.09 level. So the last correction that we had was $4 a barrel, and $4 a barrel will take you right back down to 56, and that'd be your $4 a barrel. You'd still be in an uptrend. So that's what we're watching. If you're bullish at crude oil, keep a really close eye on that 5,400, folks. 5,500, because if it breaks below 54, as you can see on the chart, that's going to be relatively negative because it's going to take out those higher lows, and that's what you get when you define a downtrend. And if you have lower tops and lower bottoms, you're in a downtrend. If you have higher tops and higher bottoms, you're in an uptrend. And that's what they say here at the offices of Duke & Duke in Philadelphia, Pennsylvania, and also our auxiliary office over here at the Excelsior Hotel in Hong Kong. It's being torn down after 46 years. I made my first trip here in 1980 with Drexel Burnham Lambert to make a little speech on gold, and the conference was being run by Dr. Mark Rich. No, what's Dr. Doom's name? Doggone it, I know Mark like I've been to his house many times. Mark? Oh, shucks, I can't remember. Anyway, it's a little late for me here, folks. Anyway, we had a big conference here in gold. Harry Schultz was Mark Faber, Dr. Doom. Yeah, Dr. Mark Faber. And Harry Schultz was there and a bunch of other famous folks that have since gone on to that big trading room in the sky. But that was the old days of 1980. Actually, there was nothing across the street. And now the yacht harbor, they're adding land into the Victoria Harbor, and they're building more and more buildings. This building will be a 70-story office complex with some apartments in the next few years, but they start tearing it down in April. It's actually a little bit sad because, gosh, I don't know how many times I've stayed here over the years, but it's been quite a few. Folks, a lot of things are happening in the dollar, and let's take a look why. If you remember, one of the things that we mentioned, and believe me, you remember how bearish I've been on the Treasury bonds, but look what's happened with Treasury bonds, folks. We had that head and shoulders pattern, as you can see. Bear with me here 1 second. Right at a 382 level, beautiful ABCD, and it took 6 weeks to form, folks. That's usually a very good sign with high-level consolidation. And now we're ready to almost break out of the highs from January. If it does that, that's a very bullish sign because you have an ABCD. It's your first ABCD correction in a potential bull market that Gartley talked about quite a bit. And as you can see in the structure itself, if you take the AB leg, add it to the CD leg, you'll notice you get right up to just about 55. 40 to 50, 15600, and that's quite a bit. Now you think that's a big breakout, but frankly, folks, all that is going to be is a 61% retracement of the long-term bond chart. That's not going to get there overnight. You notice the A leg started in October and it went all the way into December, so it could take 3 months for it to get there. So once we clear that area of 149, and we're not too far away, then we got it. Now, what would cause this possibly? Well, if the stock market weakens up, there could be that infamous flight to quality that they see where people buy bonds in order to protect themselves. But we'll see. Now, rates are dropping rapidly right now, and if they get above that 149 level, I believe they will start to accelerate, but we'll need to wait and see if that is going to happen. So I think it's quite important because the fact that these are related to the currencies, and that has caused, some strength in the U.S. dollar over the last day or two. And we want to cover that euro in depth here. We'll bring up the chart here. And then when we get back from the break, we want to talk about it a little bit because this is going to be the proverbial moment of truth in this euro. So we'll watch it very, very closely this morning to see if it's going to hold this level here of 112.80, but right now we're trading at 113.09. Not too much is happening, and we'll cover that euro chart when we get back from the break here. And then we also want to cover one of the key stocks in the whole world. We'll do that after we get back from the break and chat with the euro. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, as you can see from the euro here, we had that 3 drive to a bottom pattern. We had the really strong rally taking us up to exactly the 78% level just a couple of days ago. Now we've had a big break the downside. You can see it is in ABCD format, and the very, very important level at 1280 must hold. We're trading at around 1309 right now, because if we get below that 112 area near 111.76, this is going to be a very, very bullish to the U.S. dollar and extremely negative to the euro. So we'll keep a close eye on that. David White has informed us that part of this break that we're seeing in the stocks is the fact that the German Bund is trading at 0 interest rate now, the 10-year. That means if you give them your money for 10 years, they're kind enough to give you back your original principal. That is such a really good deal. So we'll see how that works out, but what they're talking about in the financial press. This German Bund, if you remember, we had that long-term, very, very substantial break, and I'll put that euro chart up. Thank you for reminding me here, folks. We'll get it going right here, and you'll see that here's a euro at that really key level of 112.77, which is that 61% retracement. And if you look closely, you'll be able to see that that would be a head and shoulders pattern at that point. The fact that it hasn't totally collapsed, given the news, is something that may or may not be important. We'll have to wait and see if that is going to be the case. Now, I wanted to I'm over here giving a nice lecture. By the way, folks, do you know that I won a very big award yesterday here in Hong Kong? They have a reward for the person, you know, we have those forms in trade, the money, fear of getting out of a trade too soon, and also, you know, the fear, I can't remember the rest of them because it's too late at night. But anyway, one of the most important ones, of course, is the fear of leaving money on the table. And they have an award here. We had a big banquet last night, and of course I was a guest of honor, because guess what, folks? I think I must win this for the year. Look what's happened here in June hogs. We bought June hogs at 73.15. You'll notice the 61% retracement there at 80.50. We booked a very nice 7-point profit. And if you want to, you can figure out how much it is between 81 and 95, folks. That's 14 points. That's twice as much as I made. And that doesn't make me feel as well as I'd like to, but you know, that's one of the fears that you have, and you're going to have all those fears already realized, because the fear of losing money, that's going to happen. The fear of missing out, it's going to be happening in all of them. They just don't really mean very much, because you have to go through each one of them in order to trade, because trading is about taking a calculated risk, and we do that by looking at the patterns. Hopefully they'll come a little bit better. And I had a choice there to use a trailing stop or to get out, but what I did was just leave it on the table and see what happened, and we'll move on to the next one. You know, it's much to be out of a market wishing you were in than in a market wishing you were out, and this is a perfect example of that. So we'll see what's going on. Longer term, folks, the bonds are still bearish, but we are in a very distinct rally here because of that head and shoulders pattern. I wouldn't, you know, we've been talking about that for at least a week or more, because it, you know, filled in perfectly exactly at 143, and it was a beautiful head and shoulders pattern with the ABCD. So all that lines up to tell us that we're pretty close to, you know, something that I think is really dramatic. So here is a chart that we're going to be talking about tomorrow in Hong Kong. We've got a full day seminar with people from all over Asia, and I wanted to bring this up because it'd be good for the folks out here in the TV den and some of the other places to see that we have a Microsoft chart here over the past 9 months, and all we did was mark in the moves that are there. You can see over the past 9 months, Microsoft has moved 15 points, which is roughly 10% of its value. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's nearly once a month. Now, if you really want to get creative here, what you should do is pick up your chart at home and get a blank chart up, and then draw the patterns in on Microsoft, because that is a very, very interesting chart, folks. It has many, many similarities to one of the other FANG stocks that we were watching, and that is Mr. Facebook. And if you look at Facebook, way back in, actually right around the 28th of July, which happens to be the birth date of none other than Ralph Nelson Elliott. So we'll see if that's going to be the, you'll notice that we had that big island reversal there. And if you would have bought a, you know, say a $150 put at that time, the cost of about 10 cents, you can see how much money that might have made. But take a look at that pattern, compare it with what's happening to Microsoft right now, and make your own decision what you'd like to do. But it's very, very interesting up in this area. So has a lot of harmony, a lot of symmetry, some beautiful patterns, and you ought to look at it, because it really does have some really incredible things working in your favor. Also, one other one that we're watching, because we just hit that yesterday, and that is the old Alphabet or Google. You'll notice that we hit that beautiful area up here at the 112.10, and so far that has been the 786. Now, before we come to our good friend Mr. Winsky from Astro Trends, we need to talk a little bit about the E-mini S&P, and we'll get that up here in just a second. And here it is, and we'll get it up here, and I want you to pay close attention if you're technically oriented. And I think a lot of you folks are. You'll see that dark line that you see there going back to February and where we are right now. That is some type of resistance line. If you look at it very closely, that could be the left shoulder on the left, the head there at the full moon there in September, and here we are with a full moon and everything at this level right here. We were looking for a short sale at 28.70. The market came in at 28.66. And so we'll start using our auxiliary trading system of the 400-day moving average crossover to the 200-day moving average. So we'll be starting that on Monday as part of the intraday trading course we have here at TFNN. And if you believe that, I still have 2 shares of the Brooklyn Bridge for you. So take a look at that. But if you have to do anything to really help yourself today, as far as technical analysis, please look at that Microsoft chart, folks. It's a Bible of technical analysis, and it is one of the most active stocks and the most, well, here's from our good friend Byron Tucker, showed you what's been happening over the past 23 years in the tech stocks. You got Apple at 853 billion, Microsoft at 810 billion. By the way, if you bought an original issue in March of 1986 for $10,000 with dividends and stock splits, that's worth 1.7 million. You also have Amazon there, 792, and of course Facebook bringing up the rear here at 460 million. Stay tuned for Mr. Winsky. He calls it to the minute. Look forward to hearing from him. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I believe we have Norm Winsky from Astro Trend on the line. Norm, you've got the mic. Fire away, my friend.
Thank you very much. Hopefully you can see my notes on the screen. And we're going to review. I was last on your show, Larry.
It's a big 10-4.
Okay. We're last on. Oh, first, before I go ahead, I want to apologize to you and your audience for missing Monday. Okay, profusely apologize. I got a special surprise toward the end of my presentation, hopefully to make up for my miss. All right, so I was last on your show on the 5th of March, and we had a huge cluster then. It was a Tuesday the 5th, and we had Mercury was turning retrograde, and the next day we had a new moon, and we also had Uranus changing signs, and it was one thing after another. It was huge. By the way, speaking of Mercury in Pisces, that's kind of developed into an interesting situation, and that Pisces is kind of like the ocean. It's a water sign. It's two fish swimming in opposite directions, ruled by Neptune, the god of the sea. And what do we have in the news, especially in regard to your corn and your grains and so forth? I think there's some states underwater, lately. So you might have heard about that. Just a little, my little insight there, revelation. Had a little water problem lately. All right, so so we're going to review these markets based on these different planetary events, and also you have the new moon in Pisces, again, more water, and so forth. So we got too much water, and so let's go look at these markets now. You can see the different things I had for you to watch, and then we had a huge cluster over the 8th weekend, and you'll see how that all worked out. And then I've also added the full moon we just had at the night of the 20th. And so let's go take a look at what happened. So here's your corn, and you can see you had a nice double top there on the corn over the 5th and the 6th. And then I boxed in these days here right around the full moon and see what's going on. Now, usually, let me put it that way, usually the grains would come, have a change in trend at a full moon or new moon, but this is a full moon, and most of the time on a full moon there'd be a low, but now with Mercury, the exception to that, you got to be careful because Mercury is retrograde, and that tends to be most of the time. If Mercury is retrograde, it tends to be bearish for the grains. So I'm a little skeptical about this rally right now. You're at the top of the channel here, and these grains may roll over when the waters go away. I'm sure they're going to recede in the not too distant future. Larry, you remember the massive flood they had back in what was it, '92? It was called it a 500-year flood. Remember that? The Mississippi overflowed, and they had several states underwater, and and all the fundamental people were saying we were going to have a massive bull market in the greens, and they went down. Okay. Anyway, here's beans.
Yeah,
beans
that happens all the time. Then go ahead, Norm.
Yeah, here beans are in terms of giving you a signal a little mixed. You had a nice signal here one day from the high there on the 5th, but the next day it breaks my rules in that you were down again. I like to sell near the highs, at least one day at the high, and so I'd have to give that a 50-50. You got one red arrow, green is good, red is bad. Here you go. The wheat was very nice, a nice, almost perfect double top there over the 5th and the 6th. Notice I boxed in the prices here, kind of take a picture of what's going on right now. I did these last night. And so if you look at that box, that's what's happening right now in relation to the full moon we just had, Here's your wheat. We just did that. Here's your crude oil. Kind of did a whipsaw on the Mercury in Pisces is big liquids, and oil is a big liquid. So that comes under the Pisces thing. And so there you made a high on the 5th and then made a low on the 6th for a little short-term trade there. Didn't last very long. Later you went down and made a lower low, and later on made a higher high. So that didn't last. But here's cattle. You had Uranus go into Taurus the bull. You might guess that Taurus the bull has something to do with cattle, and you'd be right. And so Uranus went into Taurus right there, and there was a little short-term low there, and then you had a little rally, and then boom, Venus is the ruling planet for Taurus, and that was the best one of the month for cattle. Right around there, you made the low of the month, and then the cattle had a stampede. Okay. Now here's your cotton. Also, it's a cousin to the cattle, believe it or not, and so it made a high right on the Uranus going into Taurus. And it was like a mirror image, almost, well, not total mirror image because only one of them corresponded. But then we also made a high on that. This point here that the cattle made its low on was a Venus at 0 latitude. I think that's what it was, right? And then here's your cotton doing making its high right there, a nice short-term high. Here's your copper. Copper is both Uranus and Venus. There's Uranus changing signs there at that little top there, and then we went down and made a nice low there when Venus got to 0 latitude. Here's your gold making its low. You know, I say the moons. You got to watch the precious metals and the greens and the financials on your moons. And so there's the gold making. One day I was 1 day early on the gold there. It went a little bit against you, tiny bit. I don't think that would be enough to get stopped out. I don't think. And then from the next day, and that's been a pattern the last several months too. Gold tends to bottom the day after turn the day after the moon. You know, the new moon or full moon. And then we've worked our way higher. Now we're in this box here. We're in this channel. If you break out of this channel, then you're going to probably get a big move, you know. Here's your cocoa. Cocoa, let's see, we had a big cluster over the 8th, weekend of the 8th. And there was something here. And sorry, I don't remember what that was, right? Oh, that's something was going on there with, oh, I know, Uranus and the Taurus. Taurus is the opposite of Scorpio. And that was, so Scorpio is the ruling sign for cocoa. And then over here you had a big cluster there. Oh, there was a big cluster there over the 8th weekend. It just took an extra day to make its low right there. It's okay for a little short-term low. Hogs were a total strikeout. All my signals, I was off timing-wise, looking for a huge cluster for the hogs. But they bottomed kind of early over here, and it just didn't work out. Here's coffee. Had a huge cluster over the weekend of the 8th for coffee. Bottomed like the next day. Had a little pop up, but coffee looks sick. It's about ready to. This was a massive, one of the biggest numbers I had in coffee in months for that 8th weekend. And it looks like it's about ready to take that out. If it doesn't and holds there might be some hope. For coffee, it's in the it says here, what do they call it? I see you know in the hospital. You know, it's hanging on. You know, barely. Here's your bonds. We had a breakout here, this downtrend for the moon. Now we went up here, and I had a big cluster over the 8th again for the bonds, and we made that top like I think about Monday, and then we had that's a nice short-term top there, pulled back. And now we're in this time and price box here. If you break out of that box, then you got a big move coming, you know. Looks like we might be close to making.
We got to pay a few bills, my friend.
Yes, sir.
We'll be right back with Norm Winski of Astro Trend, folks.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're back, folks, and we're talking with Norm Minsky of Astro Trends. All right, Norm?
Yes, sir. So I left off with T-bonds. I said that at the March 6th new moon, we had a little breakout of that downtrend. We rallied up, made a top. I had a big cluster over the 8th for the bonds, and they topped right there. And now we're into, we're now passing the full moon here we just had on the night of the 20th. And here's your dollar. You were talking about the currencies a little while ago. And here's your moon. The currencies dance to the moon often. Unfortunately, it was a day early, and then we had a huge spike on the. That was the 6th, and we had a huge spike on the 7th, and that was the high of the month. So that would have been you probably would have got stopped out there and had us for a small loss. All right, we're going down, down, down. This is looking pretty good here for. I know what you think, Larry, but I think this has the potential for a low on the dollar. Is that what you were indicating earlier or not? Or okay. Are you there?
It looks pretty close. We're going to have to see if that 112.70 holds, but right now it's holding. I'm here. Yes, 10-4.
Oh, okay. For confirmation,
okay.
you'd want to see it break out of this channel line there, at the top, that channel. All right, here's, I just thought I'd throw in another currency here. The yen has a good track record over the years of dancing to the moon. And sure enough, they made a nice low there on the 6th. And it looks like it's making maybe a high here on the full moon. So there you go. All right, I've zoomed in for the S&P. Here's a 10-minute bar chart. And I got some lines on there. Yep. And here's your, let's see. Oh, let's go back to the 5th. The 5th, I was very strong on the 5th when I talked about we had a combination there of the moon, the Mercury turning retrograde on the 5th and the new moon. And when that's happened in the past, that's often been a very good turning point. I think that when I looked in the past, 7 out of 8 were all tops, and they were all significant moves from that window. I know you talk about the when I was on your show back in 2015, and that was the high of the year. This one wasn't as good. One of the clues that it wasn't going to be as huge is we weren't at the highs. Here was the high here. This is like a secondary top. So anyway, but we did make a nice top there, and we dropped about 70 handles. So that you could have made some money on that, I think. Here's a miss here. I had a big cluster for the weekend of the 8th, I think that's what that is. There was something there, and that failed. But anyway, you still could have made some nice money on this window here of the 5th to the 6th with the Mercury retrograde and new moon. Here's your, let's see, over here now. Over here, there's your full moon, current full moon we just had. We had the big rally yesterday, and on my nightly update I send out to my clients, you probably saw, Larry, that my sentiment indicator was getting into the territory there where there might be too many longs, and so I could express some concern about that. Bigger picture, back when we broke through the 2810 level, that was an indication. Well, we didn't go that much through it the first time, but that was the first indication that this thing might be going a lot higher, and because that's your 786 retracement of the whole big down move we had, in the fourth quarter of last year. And then when we went to surge one more time and got to like 2817, that was a definite indication that there's a crack in the ceiling and that we could be going higher. So I don't see any major Fibonacci retracement levels between here and the old high of 2941 from last fall. Do you, Larry? Okay. All right. So
No, sir. I don't see any at all. We passed all of them. Not so much in the Dow Jones and the Russell, but we certainly have in the Nasdaq and the S&P.
There you go. So maybe nothing goes. No market goes in a straight line, and obviously you're going to get overbought every now and then. Have some whipsaws, and that's probably we're going to have a little consolidation here maybe today. That's what I have. My planetary index model, which is my version of Bradley, has this morning as a pullback area, but it's going to starting next week. We should work higher. And our next big window. Well, I don't want to get ahead of myself. I'll be talking about what's coming up here soon. Here's silver, because it's the precious metals, and we have a couple of points here to watch. We had a miss here. That was a little bit off on the low that occurred several days later. This worked. We had a window for the silver over the weekend of the 15th, and then of course there's your full moon we just had. That looks like a little bit of a top there on the silver. Here's sugar was indicated for the full moon now, and that looks like that made a little bit of a top there on the full moon. And here's what's coming up, Larry. So next week we got let's see, we got a little bit of an aspect to the U.S. natal chart, which is positive for U.S. stocks, T-bonds, and dollar. Obviously, they're not going to go all in the same direction, but it's positive for the U.S. And then these different markets may react differently. Sometimes good news is bad news for one market or the other. So there we go. Okay, Mercury is going to turn direct in Pisces on the morning of the 28th. And maybe you'll see some of that water subside in there or something, And let's see, we got big moon. It's going to be opposite Pluto in Capricorn. That's big for cocoa, coffee, hog, silver, stocks, and T-bonds. And then at the end of the week, over the weekend, the next weekend, you got Mercury is going to be south latitude. Mercury is your grains. And also in the corn, we got oats, soybean, stocks, and wheat. So there's your grains. And also we're going to have Mars changing signs. We don't have any futures for that because it's going into a Gemini, which is, things like communication and transportation area. I guess you could possibly do an ETF on the Dow Jones transportation or something like that. All right, here's my big surprise, Larry. I'm going to give the folks the intraday times for the day. It's 9:40 in the morning roughly now in Eastern time in the U.S. And here's screenshot time. Take a screenshot. I'm going to give you 2 screenshots. The top half of the page are interested in these times right here. And I'll give you the rules here in a moment. Take a screenshot of that. And then here's the bottom half where the bottom times are. The 3 categories are: G is for geocentric, H is for heliocentric, geocentric is from the point of view of the Earth, heliocentric point of view of the Sun, and U.S. is the U.S. natal chart based on when the country was founded on July the 4th, 1776. These times, you're going to want a 1-minute bar chart to trade this, and these things tend to turn when they work within 1 to 2 minutes. So, and we're going to use a 2-handle stop loss. If the market goes down into the time, you buy. If the market goes up into the time, you sell. Use a 2-handle stop loss. if we have one instance here where we have 2 times that are within 5 minutes, that's the bundle rule. Ignore the earlier one, go with the latter one. Like I think there's 12:48 and oh, there it is, 12:48 and 12:52, 4 minutes apart. So just ignore the 12:48 and go with the 12:52. That's pretty much most of my rules for this trading system. If you have any questions or anything, feel free to contact me. And also, I'd love to have people get a hold of me at the end of the day and tell me if they traded this on their demo account or whatever, on paper or whatever, and how they did. You know, I think this is works pretty well. I've had some of my clients make some very serious money doing this. And so there we go. There's your times. Let me know if you think we got the folks were able to get these times, Larry.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, I don't know.
Let's remind ourselves today is Friday. Football, we're back with Norm. You have more to say, Norm? Go right ahead.
Yes, sir. That's okay. So I just wanted to, for the record, I'm talking about March 22. That's today. There's your times. If you get into a trade, let's say you go long, and how do you know when to get out? Draw a simple trend line under the bottoms. If it breaks the trend line, pull the ripcord, get out. Same thing on the short side. If you go short and it starts going your way, you draw a simple trend line across the top. If it breaks the trend line, you get out. Okay, if you want more information, please contact me. I'll be happy to help you. We can do a more in-depth class. I'll give you a free 30-minute class if you like to teach you this whole system. There's not much more to it Then what that, we can learn about the planets. You saw there, those symbols look like little crescents. Those are the moon. It's pretty simple. Look at that. See that? Like there's the crescent. That's the moon. All right, let's get my contact information here so people can contact me. You can get my letter for free if you mention Larry, and a free class and all kinds of things. I have about 50 years of experience, and I'm a former Chicago floor trader. I was on the CBOE and Chicago Board of Trade. And there's my contact information. If you're driving in your car, it's 239-594-3939. Here's better just to read this on the screen. And Winsky at embarkmail.com with a Q in the middle. And that's, you can Skype me at norm.winsky. The Winsky part is W-I-N-S-K-I. Looking forward to helping some of your folks, Larry. Looking forward to having some people call me and say how they did on the trading system I just gave them. It's pretty simple. I could give you all the rules in under 2 minutes, you know. All right. I don't know if you're there, Larry, or not, but
thanks for joining us, and we'll have you on again soon.
All right,
yep, I'm here. 10-4.
Yes, 10-4 over and out.
You bet. Norm Winsky of Astro Trends, folks. Yep. We'll be with you on the flip side on Monday, folks. I'll be there Monday, Tuesday, Wednesday next week. So live every day in an attitude of gratitude, and may God bless.